What's up, you guys? This is Adhithi here, hosting this video on behalf of Be Your Own B School. If you haven't subscribed yet, please go ahead and hit subscribe now. I would like to preface and give a bit of a disclaimer that I am not a financial advisor. If you guys are going to be putting your money into anything based on my advice, please be aware that you're doing it at your own risk. These are just my recommendations based on my own personal experience. So with that, let's dig into it. Business loans for new business can be a great way to get the funds you need to start your own company. However, it's important that you understand what is involved in this process before jumping in head first. In this video, we will take a look at some of the most common loan options available in the United States and provide helpful tips on how to qualify for one. Business loans. The first step in getting a business loan is to determine what type of financing you're looking for. If you want an installment plan, the best course of action would be to apply with your bank or credit union. Banks and credit unions will often offer fixed-rate repayment plans over one-year periods, but this can depend on your credit history. If you want a more flexible repayment plan, then an SBA loan may be your best option. An SBA loan is guaranteed by the government and can be used to grow or start a business. You will need at least 25% of the total cost for your project in order to qualify for this type of financing. Business credit cards are also another option that you may use for business expenses. These cards are issued by major banks, so the credit limit is usually very high. When you use a business card, all expenses are tax deductible and money can be withdrawn from an ATM without any fees. When looking for loans to start up your new business or expand operations, there may not be one-size-fits-all option that works best for every company. However, the more research and planning you do before beginning your search will help ensure success in finding financing with the least amount of risk possible. In order to educate readers about different options when it comes to getting business loans if they need them, as well as what these types of loans entail, and how much they cost per year on average based on certain factors such as type of loan. The return on investment. Some inspiring examples for successful businesses that started using a business loan, which was founded in 2008 and started with a $625,000 business loan. The company now has over 400 employees and total revenue of about $250 million. Are you qualified for a business loan? Ultimately, can help you answer that question. In order to qualify for a business loan, your company must be in good financial standing and have an established track record of profitability. You also need collateral, typically property or equipment, as well as the ability to repay the money within a set time frame. One thing is certain, if you're looking for funding from banks or other traditional lending sources, they may not approve your application because small businesses are considered too high risk by many lenders. Business loans for new business provide great opportunities when it comes to helping startups get off the ground with minimal hassle. The process starts with applying online through the website's automation system will then match up potential borrowers. Venture capital option. As with any investment, you should consider the amount of risk involved and your appetite for that type of situation. The more risk you're willing to take on, the higher the return potential will be. Why invest in startups? Entrepreneurship is a great way to make money because it's scalable, meaning your profits can grow exponentially as long as there are new customers, but startups have risks also. Riskier ventures may not produce an income or even break even if they succeed. New business owners need financial assistance and loans. What about bankruptcy? Bankruptcy is a very serious matter. It's also expensive and time-consuming, so it should be considered as an absolute last resort for insolvent borrowers. What you need to consider before taking out a business loan. You must have collateral in order to secure the loan. Your credit score will come into play if you don't offer up any such security with the potential lender. This could affect their decision. Your projected turnover and profit figures are important because they indicate how much of a risk you represent. If this figure is too high, then lenders may not take on that risk themselves. They'll look for other ways or opportunities to invest their money instead. Start small but think big when considering what can happen in future. You must have collateral to secure your business loan. Your turnover and profit figures are important to show that you will be able to pay back the loan. Create small but ambitious goals when considering how much money can be made from your project, as it may affect whether or not someone is willing to take on risk by providing funding for you. Start with a smaller goal so there's less risk involved. but then work towards bigger projections. If both parties are comfortable with what could happen financially based off these numbers, they'll come up with more options together about where funds can best go most productively. This should help make sure pay back your loan and even make some profit. It's best to come up with a business plan before applying for your loan, as it will not only help show you're good at managing money, but also tell people what they can expect from you and how the funds should be used. Do research on other businesses that have been in similar situations, so see if anyone has had success with something like this. And then try it yourself. There are many different avenues of funding out there besides bank loans, and those who excel find ways to get their ideas funded through these various sources. This is an important step in building trust with potential investors because they'll feel better about taking risks knowing that someone else took risks too by investing first. So in order to conclude our discussion on business loans, we must first ask, what is the procedure to get a loan? As you can see from our discussion, this isn't an easy question and there are many different opinions. Some people think that any business owner should have at least $100,000 in their bank account before they even start looking, while others say it's just about how much credit worthiness your company has and what kind of repayment plan they offer. And yet some other believe that the only way to get a new startup off the ground is through loans from friends or family members who don't want anything back in return for lending the money so long as you make them part owners of your company. This would be called debt equity partnerships, wherein one person relies on a family member or friend to front the money. This is a good thing because it means you can start your company without having any capital in hand. All of these are worth considering when looking for loans for new business. It's important that you know what would work best for your specific situation. You should also discuss each option with someone who has experienced lending so they can tell exactly how much of a loan they qualify for and which one would be most beneficial. The key point is, as long as you find the right options and have done some homework, getting a loan might not be such an impossible task after all. Last but not least, seek advice from the experienced people in your life. There are many different sources of funding to explore, and you don't want to miss out on a great opportunity because you didn't know the right person. Key point is, as long as you find the right options and have done some homework, getting a loan might not be such an impossible task after all. Anyways, that's it for today, guys. Hope you enjoyed this video. While you're at it, make sure to hit the like and subscribe button, and I'll see you guys in the next video.